Hey, Wall Street Willie, what is a target date fund? A target date fund, or TDF, also known as a lifecycle fund, is a type of mutual fund or ETF that manages investments by looking at a specific time horizon. The end of this horizon is the fund's target date, which is also indicated in the fund's name. For example, 2040 Retirement Fund. TDFs are usually issued with maturity in 5-year intervals, for example, 2030, 2035, 2040, etc. So investors can choose the ones closest to the time they would need the money to meet a financial goal. Lifecycle funds usually start out with a higher percentage of equities, but over time, they become more conservative and shift their allocation to a higher percentage of fixed income. They are usually rebalanced every year in order to readjust risk and optimize asset allocation based on the time remaining until the target date. Target date funds are also called fund of funds, as most of them invest in other mutual funds or ETFs instead of individual securities. How do TDFs manage risk and achieve optimal asset allocation? TDFs are usually used for long-term goals like college tuition and retirement. So all TDFs follow a glide path, which indicates how their investments shift between equities and fixed income over the life of the TDF. Let's look at an example with a TDF that has a target date of 2050. At the beginning, the fund would invest 80% in stocks and 20% in bonds. However, as it approaches the target date, it will become more conservative. In 2030, it would have 70% in stocks and 30% in bonds. In 2040, it would be 50-50, and in 2050, it would be 30-70. Early on, when the target date is far away, the investors can handle more risk, and therefore the TDF has an aggressive asset allocation for potentially higher returns. Even if there are any losses along the way, the fund has time to recover. But as the target date approaches, the risk tolerance goes down, and therefore the TDF has a more conservative asset allocation. What happens after the target date? Can I continue the target date fund even after the target date? Yes, but what happens to your investment depends on the type of TDF. A type of TDF called to fund freezes at the target asset allocation and continues the same proportion indefinitely. A through fund continues rebalancing the portfolio and adjusting the asset allocation, making it more and more conservative as time passes. Should I invest in a target date fund? Great question, Super Cooper, but that's a topic for another time. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.